Imagine two neighbors who worked side by side at the same factory for 30 years, same paycheck, same retirement dreams. They even lived on the same street, and yet one of them ended up collecting almost $40,000 more in Social Security every single year in their 70s than the other. Not because one was luckier, not because one had some secret account. The difference came down to a single decision they each made on a quiet afternoon at age 62. A decision that took less than 10 minutes to sign, but echoed through the rest of their lives. And here's the part that should make you lean in. The one who ended up with less money genuinely believed he was making the smart choice. He thought he was protecting himself. He wasn't reckless. He wasn't uninformed. He simply didn't understand what really happens when you claim your benefits the very first moment the government allows you to. If you're anywhere close to 62 right now, or you've already started counting down the months, this is one of those moments where slowing down for a few minutes could genuinely change the shape of your retirement, because claiming Social Security at 62 isn't automatically wrong. For some people, it's absolutely the right move, and I'll tell you exactly who those people are before we're done. But for millions of Americans, it's a decision made out of fear or exhaustion, or a rumor they heard from a friend at church. And once it's done, it's very, very hard to undo. So before you fill out that application, before you click that button on the Social Security website, I want to walk you through the things almost nobody explains clearly. Not the scary version, not the sales pitch version, just the honest, plain English version. The way I'd explain it to my own mother or father sitting across the kitchen table. Let's start with the thing that trips up the most people, because it sounds so simple that folks assume they already understand it. When you claim Social Security at 62, you are not getting your full benefit. You're getting a permanently reduced version of it. And I want you to notice that word, permanently. This isn't a temporary discount that gets corrected later. For someone whose full retirement age is 67, which applies to everyone born in 1960 or later, claiming at 62 generally means locking in around 30% less each month for the rest of your life. So if your full benefit would have been, let's say, $2,000 a month, claiming early might bring you closer to $1,400. That gap doesn't close when you hit 67. It doesn't close when you turn 70. It follows you. And here's the quiet twist most people never think about. It can even follow your spouse after you're gone, because survivor benefits are often based on what you were actually receiving. But here's what most retirees don't realize about that reduction. It's not just about the smaller check today. It's about what that smaller number does over 20, 25, even 30 years of retirement. People are living longer now. If you're healthy at 62, there's a very real chance you'll see your late 80s or beyond. And a benefit that starts low and stays low, decade after decade, compounds into a number that can genuinely surprise you. That's exactly what happened to those two neighbors I mentioned. One locked in the reduced amount at 62, the other waited. And time did the rest. Now let me introduce you to Walter, because Walter's story is one I've seen play out 1,000 times in different forms. Walter was 62, tired, and honestly a little burned out from his job. He'd heard a version of the same thing we've all heard: get your money while you can, because who knows if Social Security will even be around later. So he claimed. He took the reduced check, walked away from work, and for the first few years, it felt wonderful. He had his freedom. But Walter made a second decision that quietly cost him, and this is where things get expensive. Walter didn't fully stop working. He picked up a part-time job at a hardware store because he missed being busy, and he liked the extra income. What Walter didn't understand is that when you claim Social Security before your full retirement age and you keep earning a paycheck, the government can temporarily hold back part of your benefit through something called the earnings test. And this is the part that surprises almost everyone, so stay with me. Before you reach full retirement age, there's a limit to how much you can earn from work before Social Security starts withholding some of your benefits. The exact dollar figure changes a little each year with inflation, so I won't quote you a number that might be outdated by the time you watch this. Always check the current figure directly on the official Social Security Administration website, ssa.gov. But the concept is what matters. If you earn above that annual limit, Social Security withholds roughly $1 of benefits for every $2 you earn over the threshold. Walter had no idea. He thought his paycheck and his benefit check were two separate worlds that would never touch. They weren't. And when he saw benefits getting held back, he felt cheated, even though nobody had hidden it from him. He just never asked the right question at the right time. Now, I don't want you to panic about that earnings test because there's a piece of it that actually softens the blow, and it's only fair that I tell you the whole truth. That money withheld under the earnings test isn't gone forever. Once you reach full retirement age, Social Security recalculates and gives you credit for the months your benefits were withheld, which bumps your monthly amount up a bit going forward. So it's less of a penalty and more of a delay, but, and this matters, the timing and the cash flow squeeze in those early years can seriously disrupt a retirement budget, especially if you were counting on every dollar. And it raises a bigger question that Walter never sat down to ask himself. If he was healthy enough and willing enough to keep working part-time anyway, was claiming at 62 ever the right call in the first place? That question brings us to something people almost never talk about, and it might be the single most powerful reason to think twice before claiming early. When you wait to claim Social Security past your full retirement age, your benefit doesn't just stay flat, it actually grows. For each year you delay beyond full retirement age, up until age 70, your benefit increases by a set percentage through what are called delayed retirement credits. Historically, that's been around 8% per year of waiting, which is a guaranteed increase you'd be hard-pressed to find anywhere else in the financial world with that kind of certainty. So the choice at 62 isn't really take it now or take the same amount later. It's take a permanently smaller amount now or a permanently larger amount later. When you frame it that way, it starts to feel like a very different decision, doesn't it? Let me bring in Susan, because Susan approached this from the opposite direction, and her story shows the other side of the coin. Susan was 65, recently widowed, and she was terrified of running out of money. Her first instinct was to grab whatever she could as fast as she could. But before she signed anything, she did one thing Walter never did. She sat down and looked at her actual health, her actual savings, and her actual family history. Susan's mother had lived to 94, her grandmother to 96. Susan was in good health, had a modest amount saved, and could cover her expenses for a few years by being careful. When she really thought about living into her 90s, the math changed completely. For Susan, waiting to claim a larger permanent benefit was like buying herself a bigger, guaranteed paycheck for the 2 or 3 decades she was statistically likely to live. She wasn't gambling. She was matching her decision to her real life. And that's the whole secret nobody frames properly. This isn't about a universal right answer. It's about your answer. However, that's only part of the story because I'd be doing you a disservice if I made it sound like waiting is always the winner. It isn't. And this is where I want to be completely straight with you because too many videos push people in one direction like there's a moral to it. There isn't. Let me tell you about Robert and Linda. Robert was 62 and unfortunately dealing with some serious health problems. His doctors were honest with him. In Robert's situation, waiting until 70 to claim a bigger check made very little sense because the whole benefit of waiting depends on living long enough to collect those larger payments for many years. That's what people mean when they talk about the break-even point, the age where the total money you'd collect from waiting finally catches up to and passes the total you'd have collected by claiming early. If you have good reason to believe you won't reach that break-even age, claiming early can be the genuinely smart, rational choice. For Robert, taking benefits at 62 meant more money in the years he actually had, and it meant Linda could plan around a stable income while he was still here. There was nothing foolish about it. It was the right decision for their reality. So the question you have to gently ask yourself isn't, what did my neighbor do, or what does the internet say? It's more personal than that. How's your health, honestly? What does longevity look like in your family? Do you have other income or savings to lean on in the early years? Are you married, and does someone depend on your benefit continuing after you? Those questions matter far more than any single rule of thumb. And if you've already claimed or you're wrestling with this decision right now, I'd genuinely love to know, what's weighing on you most? Drop it in the comments because I promise you're not the only one sitting with that exact worry. Now here's where things get expensive in a way most people completely miss, and I want to slow down for this because it's the kind of thing that quietly drains retirement accounts. A lot of folks assume Social Security is tax-free. After all, you paid into it your whole working life, so why would it be taxed again? It feels unfair, but depending on your total income, a portion of your Social Security benefits can absolutely be subject to federal income tax. The way it works is based on something called your combined income, a formula that adds up your adjusted gross income, any non-taxable interest, and half of your Social Security benefits. If that combined number crosses certain thresholds, then up to 50%, and at higher levels up to 85% of your benefits can become taxable. Now, I want to be careful and precise here that 85% is not a tax rate. It doesn't mean the government takes 85% of your check. It means up to 85% of your benefit can be counted as taxable income, which is then taxed at your regular rate. There's a big difference, and people scare themselves half to death confusing the two. But here's the surprise that catches early claimers especially, and it ties everything together. Remember Walter, working part-time at the hardware store? That extra income didn't just trigger the earnings test. It also pushed his combined income higher, which meant more of his Social Security became taxable too. So Walter got hit from two directions at once, and he never saw it coming because nobody drew him the full picture. Meanwhile, someone who carefully manages their income in retirement, maybe by drawing from savings in a smart order or timing when they take money from certain accounts, can sometimes keep more of their benefit out of the tax man's reach. I can't give you personal tax advice, and honestly, this is exactly the kind of thing where sitting down with a qualified tax professional or a fiduciary financial advisor for even one session can pay for itself many times over. The thresholds and rules here are set by the IRS, and some figures haven't been adjusted for inflation in a very long time, so more and more retirees drift into being taxed over the years. Always verify the current rules rather than assuming what was true a decade ago still holds. There's another rule that surprises almost everyone, and it's about spouses, because Social Security decisions are rarely just about one person. If you're married, your claiming choice ripples outward. Let me explain it the simple way. When one spouse passes away, the surviving spouse generally gets to keep the larger of the two benefits, but not both. So the higher earner's decision about when to claim doesn't just affect them. It can set the floor for what their husband or wife lives on for the rest of their life after they're gone. This is why, in many couples, it makes sense for the higher earner to consider waiting, if their health allows, so that survivor benefit is as strong as possible. It's almost like leaving behind a more generous paycheck for the person you love most. Claiming early as the higher earner can permanently shrink that survivor benefit, and the surviving spouse may not feel the full weight of that decision until years later, at the worst possible time. Consider James from Texas. James was the main breadwinner, and his wife had spent most of her life raising their kids and working part-time, so her own benefit was fairly small. James was tempted to claim at 62 he was ready to be done. But when he learned how survivor benefits worked, he paused. He realized that by waiting even a few extra years, he could substantially raise the amount his wife would rely on if he passed first, which, statistically, was likely given men's shorter average lifespans. James didn't wait out of some abstract math. He waited because he was thinking about the woman he'd been married to for 40 years and what her life would look like without him. That's not a spreadsheet decision. That's a love decision that happens to also be a smart financial one. And it's the kind of thing you simply cannot see if you're only staring at your own monthly check in isolation. Now, let me clear up a fear that pushes more people into claiming early than almost anything else, because it deserves an honest answer. I'd better grab it now, because Social Security is going broke, and it won't be there later. I hear this constantly, and I understand the anxiety behind it. Here's the grounded truth as it stands. Social Security is largely funded through payroll taxes from people still working, plus its trust fund reserves. The program's trustees have said for years that those reserves could face a shortfall sometime in the coming years if Congress doesn't act, and various dates get thrown around. But, and this is the important part, even in that scenario, the program wouldn't simply vanish and pay nothing. Incoming payroll taxes would still cover a large majority of scheduled benefits. And historically, Congress has stepped in before to adjust the system rather than let it collapse, because it affects nearly every American family. I'm not telling you to be naive or to ignore the real conversations happening in Washington. I'm telling you that making a permanent, reduced benefit decision at 62 out of pure fear that you'll get nothing is often a reaction to a worst-case story that isn't the most likely outcome. Fear is a terrible financial advisor. It almost always tells you to grab the smaller certain thing and give up the larger patient thing. Let me give you one more example because I think Mary from Florida ties a lot of this together. Mary was 62, single, and she'd been laid off. She couldn't find new work easily, her savings were thin, and rent was due every month regardless of how she felt about the earnings test or delayed credits. For Mary, all the theory in the world about waiting until 70 didn't put food on the table today. And this is the honest reality for a lot of people. Sometimes claiming early isn't a mistake, it's survival. It's the bridge that keeps you in your home. If that's your situation, please don't let anyone shame you for it, and don't let a video make you feel foolish for a choice you had to make. The goal here was never to say, early is bad and late is good. The goal is to make sure that if you claim early, you're doing it because it genuinely fits your life. Not because of a rumor, not because of fear, and not because you didn't know the alternatives existed. So let's pull the threads together because I want you to walk away from this with something you can actually use. The single most important idea is this: claiming at 62 locks in a permanently reduced benefit, and that decision quietly touches everything else. Your monthly income for decades, how much of your benefit gets taxed, what happens if you keep working, and what your spouse inherits after you're gone. Waiting when your health and finances allow it can grow that benefit substantially and strengthen the protection you leave behind for the person you love. But early claiming is the right call for plenty of people too. Those in poor health, those who truly need the income now, and those without other resources to bridge the gap. There's no universal right answer. There's only the answer that fits your body, your bank account, your family, and your honest expectations about the years ahead. Before you sign anything, sit down and look at those things clearly. And if there's any way to talk it through with a trusted, qualified professional first, do it. This is one of the biggest financial decisions of your entire life, and it deserves more than 10 minutes and a gut feeling. Here's a small challenge for you before you go. Sometime this week, take 20 quiet minutes, log into your account at ssa.gov, and actually look at your own estimated benefit at 62, at your full retirement age, and at 70. Seeing your real numbers, not a made-up example, but yours, changes the whole conversation. And then ask yourself the questions we talked about today, honestly. That one small act puts you miles ahead of most people who claim on autopilot and never look back. If this helped bring even a little clarity to something that's been weighing on you, do me a favor and give it a like, because it genuinely helps this reach other folks who are wrestling with the very same decision right now. Consider subscribing if you'd like more plain-spoken breakdowns of Social Security, Medicare, taxes, and the retirement rules that affect your money. I make these to help you keep more of what you've earned and make choices you'll feel good about for the rest of your life. And if you've got a friend, a sibling, or a spouse who's staring down that 62nd birthday, share this with them before they sign a single form. That one conversation could be worth more than they'll ever realize. Take care of yourself, take your time with this decision, and I'll see you in the next one.